Good evening, everyone, and thank you so much for joining me. So what we're going to do is cash flows. So as you can imagine, there will be a cash flow problem on the final exam. So I want to make absolutely certain that you have a firm grasp of cash flows. What I'm going to do is I'm going to show you a totally different method to do a cash flow. It's very set in stone, and if you follow these steps in order to create a cash flow, you pretty well get 100% of your cash flow correct, or the majority of your cash flow correct. So I'm going to teach you the steps to a cash flow, and I'm, just one second, I want to put my glasses on, sorry. Steps to a cash flow. And we're going to go through these steps when we do our first one, and our first cash flow is, I believe, ABC. So step one. So we must have a comparative balance sheet, or statement of financial position. Keep in mind it's also called balance sheet. And we have to have an income statement. Whoops, I just did that backwards. I can't believe I did that. Income statement, also called the statement of earnings or the statement of profit and loss, or we need key information from the income statement. So sometimes you'll see cash flows that do not include an income statement. This is not an unusual thing, so just be aware of that. So let's flip forward. So here we have ABC. I've got an income statement, so that's perfect. I've got an income statement. I also have a balance sheet, also called a statement of financial position. So I'm good. I've got what I need to begin. So step two, on the statement of financial position, strike through all subtotals and totals. And on the income statement, strike through all subtotals, but keep net income. And of course, we know net income is also called net earnings, or it could be called profit. Any of those things is possible. So here we go. We're on the income statement. I have gross profit, so I'm going to strike it through. Depreciation expense, salaries, total operating expenses, strike it through. Interest expense, income before income taxes, I'm going to strike it through. And then net income I have to keep. So I'm going to keep that. I'm going to go to the next page. I'm now on the balance sheet. Let's see. I've got total current assets, strike through. I've got land, probably total long-term assets, get rid of that. Total assets, dump it. Liabilities, total current liabilities, get rid of it. Total liabilities, dump it. Then I've got total shareholders' equity, and I've got total liabilities and equity. There we go. So I've strike all that through. You want to do that, and I hope you're following along on your sheets also. Okay, so that was step two. Step three, I'm going to do that on a new page. So now, step three. You've got to apply the following formulas. Now, for assets, and actually to be more precise, it's not assets, it's debit accounts. Our formula is prior minus current, and you hold the sign. So what that means when I say hold the sign is if this equals a negative number, you keep the negative number. And if this equals a positive number, you keep the positive number. Now, not all asset accounts are debit accounts. Which asset accounts are credit accounts? Depreciation, accumulated depreciation, a contra asset, which is accumulated depreciation. There is one other contra asset account that we know of that we've already covered in a past chapter. Somebody want to tell me what it is? So we've got accumulated depreciation. What is the other one? It's the allowance for doubtful accounts. Yes, Michaela, thank you. The allowance for doubtful accounts is a credit account, so we can't use this formula on it. So those two credit accounts, which are assets, and that's why I've said assets as a general statement, but it's really only all debit accounts. So accumulated depreciation and the allowance for doubtful accounts, if it's used on the financial statement, statement of financial position, you cannot apply this formula to. So let's do the other side, liabilities and equity, but really credit accounts. The formula, I'm just going to, is current minus prior, and hold the sign. All right. Now, there is a caveat here. We never apply the formula or formulas to either cash or retained earnings, which is pretty easy to remember because cash is always our first account And retained earnings is almost always our last account. Well, it actually is our last account always on the statement of financial position. So we never apply these formulas to either the first or the last accounts ever on the statement of financial position. So apply the formulas to the statement of financial position only. You don't apply it to anything else. You only apply it to the statement of financial position. And remember, when we apply these formulas, no matter what happens, if it's a negative, you hold the negative. You keep the negative. And if it's a positive, you keep the positive. So let's go over to our statement of financial position. Here's our statement of financial position. And I want to, just a second, I'm going to thicken my, to two-stroke. So I want to do this formula calculation. But one of the things that happens is students often forget what the formulas are. So how is there an easy way to remember the formulas? And the easiest way to remember the formulas is, I know that many of you, not all of you, but some of you want to become CPAs. Right? So one of the easiest way is to put a large C, because notice when I draw a C, I draw this way, and then when I go down to the bottom, I draw that way. So do you see what I just did? I drew from this side to this side. Well, this is the current year, and this is the prior year. Remember, the formula for assets is prior minus current. So as soon as I draw that C, I know I'm doing prior minus current, and I'm holding the sign. I don't apply it to cash, but I can apply it to the next item. And the next item is accounts receivable. 130,000 minus 180,000 is negative 50,000. Everybody agree with that? Nice. All right. So, thank you. So if we keep going with that, inventory 200,000 minus 230,000 is negative 30,000. And then 25,000 minus 15,000 is equal to positive 10,000. Then I'm on land, so 600,000 minus 750,000 is negative 150,000. Plant and equipment, 500,000 minus 700,000 is negative 200,000. And then accumulated depreciation, 200,000 minus 250,000 is negative 50,000. Agreed? Exactly. No, because this is a credit account. So I have to do 250,000 minus 200,000. This is actually positive 50,000 because it's a credit account. So I actually have to do this one for the accumulated depreciation, not the asset one. Right? So keep that in mind. Now I'm going down to liabilities. And don't forget, assets are equal to liabilities plus equity. So if I know for liabilities and equity, I'm going to do the opposite. I'm going to do the current minus prior. So 130,000 minus 148,000 is negative 18,000. 68,000 minus 63,000 is 5,000. Positive. 90,000 minus 100,000 is negative 10,000. 350 minus 300 is positive 50,000. 550,000 minus 400,000 is positive 150,000. And we never apply it to retained earnings. Did anybody get any different numbers than I did? Does everybody understand about how to apply the formula and how you can use the reminder? All right, good. So now we're going on to the next. So wait, I want to turn my writing into black. All right, so now we've got this. We've done the steps. We've done step 3. We're moving on to step 4. Well, that's what I wanted. I wanted a thicker thing. I don't know what was happening. So complete step 4 is complete the retained earnings proof to determine dividends, because we need to know the dividends. So what is the retained earnings proof? Well, the information comes from the statement of financial position as well as the income statement. So what we're going to do is we're going to do retained earnings opening. And retained earnings opening is equal to the prior year's retained earnings, because the prior year's retained earnings is equal to closing retained earnings, which automatically becomes opening retained earnings the next day. Then we're going to add in the net income, also called net earnings, also called profit, right? That comes from the income statement at the bottom. Then we're going to deduct the dividends. So the dividends are actually going to be a negative number, but we don't know what that is. And then we're going to put the retained earnings closing. And the retained earnings closing, I put this in brackets. It's not really in brackets, just so you know. It's not that it's in brackets. I was just kind of surrounding the words. Opening retained earnings most likely will be positive, right? So I apologize for that. Dividends will be in brackets. So then retained earnings closing is the current year's retained earnings. Now, if you solve for this, then you will discover what dividends are. So let's go. Here we go. I like to do it in the corner here on my page. Everything you do, I should be able to see this when I actually look at your page. All right, I should see this work. So we're going to start with retained earnings opening, which is 324. So I'm going to do 324. I'm going to add in the net income. I can't remember what the net income is, but I can look at the income statement. The net income is $225,000. So I add in $225,000. Then what I'm going to do is I'm going to deduct the dividends, and I don't know what they are. And then I'm going to put the closing retained earnings, and the closing retained earnings is $489. So now I'm going to solve for X. X is equal to what number? 60,000. Did everybody get 60,000? And it's actually negative 60,000. Like, it's a negative number. And I want to denote it as a negative number because we're doing the cash flow, and that indicates that this was an outflow of cash. Was everybody able to calculate 60,000? Perfect. All right, so now we have the amount of dividends, because what we're trying to do is we're trying to create a cash flow statement, so we need to know all the cash that flowed in or out of the company. So let's go back to our step-by-step process. We're going to add a new step here. We've finished this one and going on to the next one. Okay, step 5. Step 5 is to read the additional information and complete a TAccount proof if any of the following has happened. There's a sale of property, plant, or equipment. There is a sale of intangible assets. There is a sale of investments. There is a purchase of assets using shares or debt. Oops, no, I was right the first time. Debt. And finally, you both pay and reissue debt. If any of those things exist in the additional information, you have to do a TAccount proof. So let's go to the additional information. So here's the additional information right here. Dividends were declared and paid during the year. We already know that. Land and plant and equipment were purchased. So purchased but no sale. Additional shares were issued for cash. So that's not an exchange for a capital asset like property, plant, and equipment. Cash was received from additional bank loans. Doesn't say that the bank loan was paid and then taken out again. What is an example of a pay and reissue debt? So wait one second. I'm going back to that page. A pay and reissue debt is when a company repays their debt. So let's say they have $10,000 outstanding with the bank. They pay the $10,000 off, and so their debt goes down to zero. And then they reissue a debt, and let's say they take out $15,000. So IFRS and ASPE require you to show both of those things. So you have to show that the company repaid the $10,000 of debt and then they took out new debt. If you simply showed $5,000 of debt taken out, you're not showing reality, which is the fact that you already paid it all off and then took out new debt. All right, so none of these things have happened, so I'm not going to show you the TAccount proof right now because we don't need it. So now step 6. Step 6 is to categorize all the numbers calculated into the 3 activities for cash flows, the 3 business activities. So we denote O is equal to operating activities. Operating activities generally involve current assets accounts and current liability accounts. Generally, not always, but generally. Investing activities, they almost always deal with long-term assets. Property, plant, and equipment, long-term investments, intangibles, goodwill, that kind of thing. And then F is equal to financing activities, how a company generates funding for the company. They almost always involve long-term debt and shareholders' equity. So every single number has to be denoted with one of these letters. So let's go back to what we did on the statement of financial position. I like to take a different color so that I know what I'm doing. I can see it. All right. So now here we are at accounts receivable, O, I, or F. Oh, another way of knowing that this is an operating activity is to look at it and say to yourself, if I do a debit to accounts receivable, what is the credit to? And if the credit is an income statement account, then you know absolutely that this relates to operations. So a debit to accounts receivable will result in a credit to sales revenue, which is on the income statement, so I know it's operations. Inventory, 30,000, negative 30,000, O, I, or F? Exactly, because if we do a credit to inventory, we're doing a debit to cost of goods sold. Prepaid insurance, does everybody agree that it's an O? Okay, it is because a credit to prepaid insurance will result in a debit to insurance expense. All right, land, investing, absolutely. And so when we're looking at plant and equipment, that would also be investing. Accumulated depreciation, it is O. How do we know it's O? Because a credit to accumulated depreciation results in a debit to depreciation expense, and depreciation expense is on the income statement, so it's an O. Accounts payable, absolutely, because a credit to accounts payable results in a debit to an expense account. Salary and wages payable, yes, it is an O because a debit to salary and wages expense, and then a credit to salaries and wages payable. Income taxes payable, O, because of course the other side is income tax expense. And long-term bank loan, financing, I agree. And then common shares, financing. And then dividends. Ooh, okay, we got some O's and we got some F's. Do dividends show up on your income statement? Exactly. Remember, it is never an O unless a number shows up on the income statement. So this is not O. So in that case, which is it, I or F? It is an F. It has to do with the funding of the corporation. When we fund it through shares, we end up paying dividends. So that's why it's an F. So we've now denoted all of these things. The only thing we have to do, so wait a minute, let's go back to our steps. Here we are, steps. Darn it. I've just about run out of room here. I'm going to squeeze it in at the bottom. Step 7, create the statement of cash flows, because we're done. So now, let's go and create the statement of cash flows. Before we do that, I want to do one more thing. On the statement of cash flows, we have to indicate whether the accounts are increasing or decreasing. So when we do that, most often students look at the fact that this number right here is a negative number, and they're like, okay, so accounts receivable is decreasing. But accounts receivable was not decreasing. Accounts receivable is increasing. It's moving from 130 to 180. So here, I'm going to put increase. This one is moving from 200,000 to 230,000. This is an increase. This one is moving from 25 to 15. This is a decrease. We need this denotion on our cash flow statement, so it's really important that we do it. We don't have to do it for land, equipment, building. We only have to do it for the items that are O's. So it's only required for O's. So now I go down to accounts payable. Accounts payable went from 148 to 130. It's decreasing. Salaries and wages payable, 63 to 68, increasing. And then income tax payable went from 100 to 90, so that is decreasing. Those are the only things that I really have to denote. Oh, accumulated depreciation, we actually just denote this as depreciation expense. All right, so we are now ready, believe it or not, to create the whole statement of cash flows. We have finished everything, and we need to do nothing except for put these in the correct categories and ensure that the statement format is perfect, because just heads up, guys, the statement format is worth marks. Right? It's not just your ability to calculate numbers, but also your ability to produce the statement of cash flows. So I'm right now going to go ahead and create the statement of cash flows. We've got ABC Company. I do not like this color. There we go. ABC Company. I'm going to do statement of cash flow. I'm going to do year ended. Notice this is like the income statement and the statement of changes in equity, year ended. Only the statement of financial position has the word at. So this is December 31st, 2012. I'm going to start. I think I'm going to need more space, so I'm just going to split this in half. You guys can keep going down, but I'm going to split it in half. So now I'm going to start. Don't forget, usually I would just start writing, but I know I'm going to run out of space. So I'm going to start with operating activities, and I'm going to start with net income, which is also called net earnings or profit. And we know that it's $225,000. We got that from the income statement. Now, I do non-cash adjustments. And my non-cash adjustments are depreciation expense, which we know from our previous page is $50,000 positive. Notice I'm not changing anything. I am keeping the indicators that our formulas determined. So now I do changes in operating capital. And here's where I start using my knowledge of what happened, right? Increase in accounts receivable. And that is negative $50,000. And then I have an increase in inventory, and that is negative $30,000. I'm getting all of these numbers from what we did on the statement of financial position. I'm not going outside of that at all. I have a decrease in prepaid insurance, and that is positive $10,000. I have a decrease in accounts payable, and that is negative $18,000. I have a decrease in salary and wages payable, and that is salary and wages payable $5,000. And then I have a I had an increase. Was it an increase in salary and wages payable? I think I wrote it down wrong. Increase. Increase. My apologies. And then there was a decrease in taxes payable. And that is negative $10,000. And that was all that we needed to do for the O's, right? I don't think anything else was denoted as an O. So now what we're going to do is we're going to do cash, and then I leave a blank, from operating activities. I'm not going to write out activities because I don't have enough room. The addition of this is going to be all of these numbers. So I'm going to take all of these numbers and I'm going to add them together, and they're going to come out and give me the dollar value that I need right here. So somebody tell me what it is. What is the cash flow from operating activities? All right, Mark got 182, Andrew got 182. It is 182. So that is an inflow. So now I can add this word because I discovered it was an inflow. So this finishes the operating activities. We can now move on to the investing activities. Now, on your page, you're going to keep going down. right? This is just one continuous cash flow. But I knew I was going to run out of room, so now I'm going to do the investing activities up here. Now, we had two investing activities. Let's just go back for a moment. We had two investing activities, remember? We had land and we had plant and equipment. Now, when we do investing activities, we have to describe what is going on. So we cannot simply say that land increased. For land to move from 600,000 to 750,000, what must we have done? Purchased. Exactly. So we have a purchase, right? And again, we have a purchase here. So for investing activities, we have to describe what is going on. If you do not do that, that's going to be problematic and it's going to lose you mark. So marks. So purchase of land. And don't forget, we calculated this as negative 150,000. Then we would do purchase of plant and equipment, and that would be negative 200,000. And so there's nothing else. There was only two things. So we're going to do cash blank from investing activities. I'm going to shorten it. And we're going to do a total of only these two numbers. So each of the activities are added up separately. So this will be negative 350,000. And we see that this is an outflow. All right. So now we're going to move on to financing activities. And the financing activities, let's go back here. Again, we have to describe the financing activities. So long-term bank loan went from 300,000 to 350,000. How would you describe that? Borrowed? Absolutely. So you can say borrowed money. I always say issue, because when you issue a bank loan, that means you give them a contract and they give you money. But if you want to say borrowed money or proceeds from bank loan, that can be another choice too, because you received proceeds, meaning you received cash. So anything that you want to say. Common shares, what should we say? Exactly, we issued common shares because they increased. Retained earnings, we say nothing because we don't use retained earnings. We just use this here. How should we describe the negative 60,000? Dividends declared. Actually, it's dividends. No, we can't say the word dividends declared, Mark, because this is a cash flow statement. So what do we have to say? No, dividends paid. You can't say issued, dividends paid. You have to say dividends paid, because it's a cash flow, and the only thing we care about is items that have been paid. If the dividends have only been declared, we actually don't put them on the cash flow statement. So now we're going back here, and now I can do my financing activities. I've got issued common shares, and that's positive 150. And then I have dividends paid, and that is negative 60,000. And then I've got proceeds. But again, you could say issue. Proceeds from bank loan. And that is 50,000. Now I'm going to do my subtotal, and I'm going to do cash blank from financing activities. And what number do we have here? 140,000? Positive. So now that we have all this, what we've got to do is we've got to add it together. So what we're going to do is we're going to take the cash flow from the operating activities. We're going to add it into the cash flow from the investing activities, and we're going to add in the cash flow from the financing activities. We're going to come up with a net change in cash. So this is telling us how much did the cash change by in total. So what is our net change in cash? Now, generally, I've got to put a net increase in cash or a net decrease in cash. So I'm going to put net blank in cash. Is it a net increase or a net decrease? Negative 28,000. So it's a net decrease in cash. Then I do my opening cash. Where do I get my opening cash number from? Statement of financial position, prior year, right? Prior year, what is that total? $80,000. Now, if I add these two together, which I'm going to do right now, and don't forget this is $28,000. If I add these two together, I have $52,000. If you look at your statement of financial position, is the closing current year's cash position $52,000? So this tells you that this is a perfect and very beautiful cash flow. Worked perfect. Yes, I do think that this is a method, Andrew, that is pretty tried and true. And it works perfectly, and you don't have to memorize very much, because as long as you do that big C around. I wasted so much time on the book. I know, and I find the book really confusing. It asks you to memorize all these formulas, and I don't think that's necessary at all. This is very straightforward. Now, I am going to complicate your life by doing step 5, which we haven't done yet, but I do think, I mean, you know, we've been on here for less than an hour, and we've already done a complete cash flow, a very simple cash flow, but we've done a complete cash flow. Okay, so what we're going to do right now is we're going to move forward onto a blank sheet. I don't know why. Oop, another blank sheet. Here we go. We are now on Cooper Company. You know the steps up to step 4. So I would like you right now to do up to step 4. Apply up to step 4, but don't do step 5. Go. Here. All right, so step 5, oh goodness, now I have to go back to step 5. Step 5 says, read the additional information and complete a TAccount proof if, and then it gives you some ifs. So we're going to go to step 5. I did not calculate any of these numbers. You guys are going to be on the hook for the numbers. I'm looking for here. Additional information. Equipment with a cost of $24,000 and accumulated depreciation of $15,000 was sold for cash. And equipment was also purchased. It doesn't make any difference if it was purchased. If it was only purchased, we could just do what we did on the first one. But since there was one purchased and one sold, now we have to do a TAccount proof. As soon as you see any of those indicators for a TAccount proof, you better do a TAccount proof. So we're going to do one right now. Here we go. So doing a TAccount proof, what we do is there's some steps to a TAccount proof. Now, I'm not writing down the steps to a TAccount proof. To look at a video which does the steps to a TAccount proof for this company, Cooper, look at YouTube. For me, mouse crack. And you're going to look at playlist, and you're going to look at cash flows. And you will see a TAccount proof for 3 companies. And I've given you those 3 companies, so you'll see just the TAccount proof for those 3 companies. All right, so that's where you want to go, but I'm going to do the TAccount proof. So what you start with on the TAccount proof is you start with 2 T's. We need 2 T's here because it's equipment, so we're going to put equipment in here, and we're going to put accumulated depreciation here because it's a related account. We know that we know that equipment was sold, so whenever we sell equipment, we know that there's an entry. There's going to be a debit to cash. There's going to be a credit to the equipment for the historical cost of the equipment. There's going to be a debit to the accumulated depreciation. And then there's either going to be a debit to a loss on sale or a credit to a gain on sale, right? So now I've set it up. So what I'm going to do is I'm going to first look at the statement of financial position to find out the opening balance for equipment and the closing balance for equipment. The opening balance for equipment is going to be the balance in the prior year. So here we go. I'm looking at the equipment. The balance in the prior year was $262, and the current year is $270. This is the opening balance, and this is the closing balance. So I'm just going to plug it in. Also, this is the opening balance for accumulated depreciation, and this is the closing balance for accumulated depreciation. So I'm just going to fill those things in to my TAccount. So just one second. All right, so opening balance is $262,000, and then this is going to be $270,000. Then we're going to go over here 109, because accumulated depreciation is a credit account. We're going to go to the bottom, and 118. So first you find the numbers on the statement of financial position and input them. Then you're going to go to the income statement and see if there's any numbers from the income statement that you need. What number do we need from the income statement that would go in anything we had on that page? Depreciation expense. Lovely. Anything else? Gain or loss. Now, you'll notice this gain has brackets around it, right? The 3,000 has brackets. That's because it's in the same area as this interest expense. So it's not actually a negative number. This is a positive number. It's a gain. All right, so we need those two things. We're going to put them into our TAccount proof. So I know that this was now a credit to a gain on sale, $3,000. Where do I put the depreciation expense? Because remember, that's a debit to a depreciation expense. What's the other side of the entry? Accumulated depreciation. Debit or credit? Credit, exactly. And that was $24,000. Now, because, and then I denote this as depreciation expense. Because I did that $24,000, can I now solve for this unknown number over here? And if so, what is it? All right, so everybody agrees that this is $15,000? So that was a debit to accumulated depreciation. This $15,000, where else can it go on this page? The journal entry. Absolutely. This is the debit to the accumulated depreciation, $15,000. Excellent. Okay, so now we've exhausted the income statement, right? We've used both of this. We've used this. We've used this. Now we can go over here to the additional information. That's the last place we go. Equipment with a cost of $24,000. That's historical cost. And accumulated depreciation of $15,000. Actually, I didn't need to give you that because you already calculated it on your own. In the final exam, you're going to have to calculate it on your own. Heads up, guys. All right, so we already know this number, so we can put in the cost of $24,000. I want you to tell me, where do I put this cost of $24,000? The credit to the equipment, $24,000. Where else can I put it? Into the T account. That's a credit, so we're going to put $24,000 over here. Since we put $24,000 over here, can we solve for X over there? $32,000. The $32,000 now tells me the number that was there. Okay, so now we have everything here. Remember what the next step is after step 5. The step after step 5 is to denote everything as a, denote the amounts. So wait one second. I need to do this. Ugh. Okay, I need to do this for 1 second. Wait 1 second. This is Cooper Company. So we know that this is negative $16,000. Just a second, guys. Negative $6,000. Negative $1,000. Then I've got positive $7,000. I've got negative $4,000. I've got positive $2,000. I need equipment was a negative $8,000, and this was positive $9,000. This is gone. This is gone. This is gone. This is gone. Oops. Yeah. Note payable is the note payable is a negative $10,000. Then total liabilities is toast. Then I've got common shares is 13,000 positive. Retained earnings. Can somebody tell me what the dividend was? Retained earnings proof. Let's assume I did the retained earnings proof. You guys should be able to tell me the dividend. The dividend was, okay, so 15,000 negative was the dividend. Okay, did I miss anything? I think I got everything. All right, okay, so now, what is our next step, right? Because we want to go through the step-by-step process. We have done step 4. We did step 5. Step 6 is to categorize all the numbers. Okay, so we're back here, and we're categorizing all the numbers. Let me change my color. Excellent. All right, accounts receivable. What do we got? Operating. Inventory. Operating. Prepaid advertising. Operating. The equipment. Nothing. Can someone tell me why I put X's through it? Come on, tell me why I just put X's through it. Because equipment was sold and I did a TAccount proof. Look, I just did this TAccount proof, and you can see the same numbers in here, only they ended up being very different. Whenever you do a TAccount proof for any accounts, the simple calculation you did when you use the formula must be eliminated, otherwise you duplicate your work. Okay, good. So keep that in mind, right? As soon as you do a TAccount proof, the accounts you are doing the TAccount proof for must be eliminated, and we ignore them. All right, accounts payable. O, and then we've got salaries payable. All right, O, and income tax payable. Got another O, and we've got note payable, financing, and common shares, financing, and dividend. Oh, financing. Excellent. Okay, so now what we have to do is there's two things. We have to look at each of these numbers, and we have to decide whether it needs to be on the statement. So the first question we say is, does this number go on the statement of financial position? We're going to say yes, in which case we then have to decide which category, or no, in which case we're going to put an X through it. So the $262,000. Yes or no? Remember, exactly, no. This is on our statement of financial position, and we don't use any numbers from the statement of financial position on our cash flow, right? We use those numbers to calculate a number that will show up on the cash flow. None of those numbers show up on the cash flow themselves. So that means 270 is also off the table. What other numbers are off the table? We know automatically they're off the table. Which other numbers are immediately off the table? Exactly. The opening and closing balance of accumulated amortization are also off the table because they are numbers that exist on the statement of financial position. And no number from the statement of financial position will go on the cash flow. Excellent. All right. The $32,000 that you see right here, does it go on the statement of cash flow? Yes. What should we call it when we, how should we name it or denote it on the statement of cash flow? What would we say about this? This $32,000 is caused by what? A purchase. Good. Category. I. Now, because these numbers are not denoted as negatives or positives, we also have to decide whether it's a negative or negative or positive. Is this a negative or a positive number on the cash flow? Does it cause an inflow or an outflow? Inflow positive, outflow negative. Negative, because we're buying it. All right, $24,000. Do we put it on the cash flow? No, we do not. This is history, right? I mean, when you think about it, now I can get rid of this 24, right? This is the historical cost of the equipment we sold. So this is old information. This is history. We don't put history on the cash flow. We only put current things on the cash flow. The $32,000 is what we bought this year, current. We don't put history on the statement of cash flow. Okay, now we're over on accumulated depreciation, $15,000. Yes or no? So we got a yes and a no. And a no. This $15,000 is all the depreciation on this old piece of equipment from the day we bought it. It's not that it's a non-cash item, Chelsea. It doesn't matter if it's a non-cash item. The question is it a history item? And this is depreciation expense on this equipment since the day we bought it. So this is history. And again, we don't put history on the current year's cash flow statement. So the answer is no, and the answer is therefore no. $24,000, does that go on to the statement of cash flows? Yes or no? Yes, it does, as depreciation expense. So it goes under which section? O, I, or F? Absolutely, operating, plus or minus? I need to know, plus or minus? Plus. Depreciation is always plus because it's a non-cash item, so we have to add it back. All right, so now, oh, hey, we forgot to calculate the cash amount. What is the cash amount, guys? Somebody give it to me. $12? Oh, you mean 12,000. 12,000. All right, so it's 12,000. Okay, so now we've got two other amounts here. 12,000, go on the cash flow, yes or no? Absolutely, thank you, Chelsea, because it's cash. And we would say sale of equipment. Okay, which section? Investing, plus or minus? Plus, because it's an inflow of cash. All right, now, the gain on sale, are we going to put it on the cash flow? Yes, we are, because it is on the income statement, so I have to put it on the cash flow. The gain on sale, and remember we did this in our webinar when we were doing depreciation. A gain or loss is due only because of the method of depreciation. So because it has something to do with depreciation, it goes onto the cash flow statement. It is a non-cash item, right? It is a gain or loss that exists because of the method of depreciation, which has nothing to do with cash. Because it's a non-cash item, we have to get rid of it. Depreciation is an expense on the income statement, and we add it back to get rid of it because the expense is negative, the add back is positive, the two together equals 0. The gain on sale is the same. A gain on sale is a positive on the income statement. We have to get rid of this, so we're going to put a negative. What section is this? Operating, investing, or financing? It is not investing. It's operating because the gain on sale is on the income statement. And remember that I said anything that's on the income statement has got to be operations. So it's operations and it's negative. You now have 100% of what you need to create the cash flow statement. I am not going to do the whole cash flow statement because we've already done one and you now know exactly what you have to do. But I will give you some hints. I will tell you what the total amount is, and you guys can do it on your own then. So the cash flow from operating is 41,000 positive. The cash flow from investing is 20,000 negative. And the cash flow from financing is going to be negative 12,000. Okay? And this is for Cooper. You should be able to company. You should be able, without a problem, to be able to create the whole cash flow in good form. And I'm leaving this for additional practice for you. You're now at the point where you can do it without a problem. Here is Alexis. All right? So this is the Alexis comparative statement of financial position, also called balance sheet. And here is the income statement. Can you quickly tell me right away, do we need a TAccount proof? Absolutely. It says during the year the company sold some of their equipment for $2,000 cash. The company did not purchase any equipment during 2010. By the way, when we do our TAccount proof, right? So let's say we have equipment here. Knowing that they did not buy any equipment means we put a 0 over here, and it means that we can then calculate this number over here. So when they say we did not purchase any equipment during 2010, don't take it as nothing. I don't need to use this information. You still need to use this information. It's critical information because only then can you know that this number should be 0, and that allows you to calculate the number on the other side. I am, again, not going to do Alexis. I'm not going to do any part of Alexis because I want to have as many cash flow statements available to you as possible. So, again, I'm going to give you information with regards to Alexis. I'm going to tell you that operating activities is equal to $18,000. I'm going to tell you that investing is equal to $2,000 positive, and I'm going to tell you that the financing is equal to negative $23,000. In addition, on my YouTube channel is the TAccount Proof for 3 companies. So the 3 companies are Cooper, so you could see that again if you want. You could watch this webinar, but you can also watch the YouTube video, HJT, and Alexis. So I've given you 3 demonstrations of TAccount proofs on YouTube. Just remember, look at my playlist for cash flows, and you will see 4 videos doing, for all of these, the TAccount proof. So you could do the TAccount proof for Alexis, for instance, and then go and check on the video to see if you did the TAccount proof correctly. And then it's a matter of just doing what you always do, put it together and create a cash flow statement that is letter perfect with regards to structure. When you create that cash flow statement, I want to see something on your final exam that looks very similar to this, right? Because every time you mess up any of the structure, I'm going to ding you marks. Now, some things that do not matter. I care, wait one second, I'm going to change the color. So I don't care about the order. The order of these things does not matter. But you better include the word increase, increase, right? Decrease, decrease, whatever it happens to be. Those things are not negotiable. Not negotiable. All right? If you don't describe that it's a purchase of land and a purchase of plant and equipment, or if it's a sale, you put sold, issued common shares, dividends paid, proceeds from the bank loan, all of those things. Did you notice that I forgot to say inflow? Nobody even noticed that and pointed it out.